What is up, you guys? Pete DiCarlo, Traders Helping Traders, and today we're going to talk about selling puts. I'm going to go over in this video how to sell puts, why you would sell puts, and why I believe it is the easiest and best way to make consistent profits within the market. And I will first start and preface this video by saying that while this is one of my favorite strategies, while this is one of the easiest strategies, and while this is one of the most consistent strategies, 90% of people don't do this because you won't make a ton of money. The max that you'll probably make doing this is 2% a week, which, if you realize what 2% a week can do for you by looking at a compound interest calculator, I like to use one on MoneyChimp, you'll realize that 2% a week for the rest of your life is absolute insanity. So let's just say you're starting with $5,000, and let's say that every year you're going to put an extra $5,000 into the market, and we're going to give this 35 years to grow, and you're going to be able to get 2% returns a week for the next 30 years. That would be 104% return a year. That means you would have over $1 billion by the time you retire, just off of that alone. Let's say that you want to only go for 1% a week, which is extremely easy to do. And I'm not some internet guru like, oh, just 1% a week's no problem. Like, trust me, you'll see. So for instance, you'd have $45 million if that were the case. Guys, it's insane what you can do by selling puts, using proper risk management, and not selling them on garbage companies. So let's take a look and let's get an understanding of how and why you would sell puts. So every single transaction in the stock market has an opposite side to it, right? If you sell a stock at a loss, somebody is buying that from you. If you sell a stock at the tippy top and then it crashes, somebody just bought that from you and they lost a ton of money. There are two sides to each and every transaction. So we all know, hopefully we all know though, that if you're buying a call, you're expecting the stock to go up. If you're buying a put, you're expecting the stock to go down. Well, if there's somebody on the other side of that transaction that is doing the opposite of you. So this means that if someone's buying a call and I'm selling them that call, since they are bullish, I am bearish because I'm selling a bullish position to somebody. And if somebody is buying a put, that means that they are bearish on that stock. And because I'm selling a bearish position to that person, I am bullish on the stock. And this is the beauty in selling puts. So obviously, if somebody's buying a put, they're bearish. If someone is selling a put, which is what I do, I am bullish on the stock. And we're going to go over how this works, and I'm going to show you specifically on Robinhood, even though I don't like Robinhood, how to do this. And I can also show you on TD Ameritrade. A lot of people like Robinhood, so that's why we're going to use it. So looking at something like Uber. And now here's the thing. This is called a cash secured put. Don't do this with a call. I will make a video in the future talking about selling covered calls and naked calls, but don't do that. You can really screw yourself. In the worst case scenario with selling a put, the worst thing that will happen is you're forced to buy a stock. And this is why we want to do this with stocks that we don't mind owning. We don't care if we get stuck owning the stock because we like the company. So let's take a look at something like Uber. Uber right now is trading at $53.19, and we're holding a 100-day SMA right here, which I feel pretty bullish. I think we're going to bounce on the 100-day SMA. Now, what you are going to do is pick a time or a expiration date in which you want to sell your put. The closer, the less money you're going to make. So if we sell a put for this Friday, we're only going to make about $80 for our premiums. We're only going to make about $40 for our premiums. If we sell them for next Friday, we're going to end up making about $80 for our premiums. So the further out in time you go, the more money you're going to make, but also the more money you're going to have to tie up. And in my opinion, the more risk you bring on and the less decay that you're going to have, which in this instance, decay is good. Because remember, if you're holding an option normally, you're constantly dealing with theta decay, which means that as you're holding that option contract, it's just pulling money from the contract and it's losing value day by day. But where does the value go? Where does the theta decay go? A lot of people think it goes to the broker. Some people think it just goes out into thin air. But where the decay goes is to the person who sold it. So to me, so when I sell somebody a put, each and every day that the stock just sits there and eats away decay, that's more money that I put into my pocket. So what I like to do is sell a put where I think I will not have to buy those shares. Now, I don't mind buying them, but I like to go something that's pretty far out of the money because I would rather make less money to have a much higher chance of profiting. So let's take a look at Uber. Uber, like I said, is trading at $54 a share right now. And I think there's no way it's going to close below 50 bucks by this Friday, March 26th. Today's the 24th. So I think there's no way Uber is going to dump 6% in the next 2 days. Of course it can, but I don't think that it's going to. I think there's a very low probability that it's going to fall below $50. So if we take a look at Robinhood here, we're going to go to the day we want to have our expiration at, which is going to be March 26th. We're going to go from buy to sell. And it's the same thing on mobile. I can actually probably show you it, even though the screen is extremely, extremely small, and it's not going to be easy for me to. But it's all you have to do is go to your normal options chain, and then just go here, and you can probably see. No, you're not. You're not gonna be able to see it. But you want to just switch the top left from buy to sell, and from the top right from call to put, so it looks the same way. Remember, we are selling a put expiring March 26th. So remember, the stock is trading. I'm sorry, this is Neo. We want to go to Uber. So remember, we're selling a put on Uber. We are hitting the sell button, and we are selling a put for March 26th. Uber is trading at $53.39. And I don't think it's going to go below 50. Now you could pick 49.50, you could pick 49, you could pick 48. And what you'll see here is this is your premium. So what this number is going to be how much money you're going to make as long as the stock closes above your strike price. So you're going to times this by 100, obviously. So if we're selling a $50 put, well, let's just say a 50-50. If we're selling a $50.50 put, you can see that we're going to make $19. So that means as long as we can close above $50.50 by this Friday, I'm going to make 20 bucks. Not a ton of money, but what you have to realize here is I have an 87% chance of profit, right? Which realize how crazy just trading normal options is. That would be the opposite. So if I were to actually buy that put, I'd have a 13% chance of making money. But selling this put, you have an 87% chance of making money. Now, you could go with something, where you have you're going to make a higher premium but have a less chance of profit. So if we were to sell a $53 put and the stock's trading at $53.50, if we were to sell a $53 put, we would make 3 times that amount. In 2 days, we would make $69. But look, we only have a 69% chance of profit here, which means that we have a much less chance of making money, but we're making a lot more money. And if you look at it, you're going to make about a 1.5% return in 2 days. And remember, our goal is 1% a week. Really, I want to do 2% a week, but we'll talk about that later. So the closer to the current price that you sell it at, the less chance of making money, but the more money you will make. The further out of the money you go, like, look, if I were to sell a $48 put, then I'm only going to make $7. Now, like I said, let's say we're pretending we're selling that 50-50. As long as Uber closes above our strike price, we get to keep all of that money. But let's say Uber dumps. Let's say there's bad news, CEOs leaving, they're getting sued over something, or the market just takes a huge hit like we've been seeing, and the stock dumps, and it goes all the way down to $48 per share. Well, in the case of this, you get to keep your premium no matter what. You get to keep it. So you get to keep that $20 no matter what happens here. But if the stock closes below your strike price, you are forced, not optional, you are forced to buy 100 shares of Uber at your strike price. So in this case, we are forced to buy 100 shares of Uber at 50 bucks. And the stock right now is trading at 48, hypothetically. That means that you're down at this time $200. But, if it's a company that you love, you could just hold on to that stock as long as you want. But for me, you're not making a ton of money, but having an 87, 88, 89% chance of making that money is huge. In the past month, I've taken about 27 positions where I sold puts and I've made money on every single one of them. Doesn't always happen that way. But if you know how to, find good trades, understand flow, do all the things we talk about on this channel, use proper risk management, and sell puts, you're going to make money pretty consistently. Not a ton of money. You're not going to quadruple your portfolio in a month, but you will make consistent gains over and over and over. So that's why I like to sell stocks that are pretty far out of the money, because this way I'm not going to end up being forced to purchase these shares. Now, for instance, when it comes to selling a put, you're going to be able to see here your chance of profit. And I really want to look for something that's at least 70% chance or higher. Let's look at another one. Let's look at NEO, since I had NEO up earlier. Now, of course, your premiums, which is the amount of money you're going to make, is going to be a lot higher when the stock is down. So if we look at NEO today on TD Ameritrade, NEO has been getting destroyed. The stock's down 10%. Let's say you think there's no way NEO is going to, go down to $33. And I just made a video yesterday talking about this. We're going to go to sell, we're going to go to put, and we're going to go to $33. So this means as long as NEO closes above 33 bucks in 2 days, well, you guys are probably watching this a day late because I'm going on vacation and I had to pre-record this. But as long as NEO closes above $33 by Friday the 26th, you'll make 35 bucks. Now here's the real question. Pete, how much money do I need to do this? Well, you need whatever the strike is times 100. So in order for you to sell a put on NEO's trading at $33, you would need 3,300 bucks. But realize this, you have an 85% chance of making money. $3,300 will make you $34 in 2 days. That is a 1% return to the T in 2 days. If you can do that twice a week, that's a 2% return in a week, which is 104% return a year. You do that for 30 years, you're going to be well off. Trust me. Guys, I'm probably sure that I missed something, but if you have any questions, comment down below. Let me know. I talk a lot about selling puts on this channel. Thank you guys for all the support. Hit the like button, subscribe to this channel. If you want to learn more about selling puts, you can become part of my private academy. Use the code down below. Use the link. Start for 10 bucks your first month. I go over live streaming with them every single morning for the first hour of market open. You get access to every single trade I take as I take it. You get access to our private Discord, and you get access to our 60-hour course library. On top of that, join our Twitter. It's completely free. I put all of my trades there after I take them. I put, top news, funny memes, YouTube videos as soon as they come out. It's a great community to be a part of. And also you can become part of our private membership on YouTube. Every Friday I stream with them. It's $3 a month. That's it. I go over questions they have. I go over top trades I've taken, news, things to watch out for. It's a great community to be a part of, guys. Thank you so much for all the support. Hit the like button, subscribe to this channel, and I'll see you next time. Peace.